Hello, I'm David Cassidy with the weekly market summary for the week ending Friday the 25th of June. After the recent dot plot shocker from the US Central Bank, all eyes were on the UK monetary policy meeting and the US PCE reading. Thankfully, the Fed's hawkishness was not endorsed by policymakers at the Bank of England, which left both interest rates and asset purchase quantitative easing targets unchanged at £875 billion. Better still, policymakers were effectively all in agreement. Although the vote wasn't unanimous, it was 8-1, as the outgoing Andy Haldane again dissented. But as he is leaving the Bank of England, it is entirely possible that the vote becomes unanimous at the Bank of England's next meeting, which is on Thursday, the 5th of August. And this voting margin tells us that policymakers, thankfully, aren't in any rush to increase UK interest rates and therefore see the current inflation as transitory. We believe that this is very positive and sensible given the uncertainties surrounding the unwinding of the job retention scheme, the furlough scheme, in September, which may see unemployment rise, and also UK-EU trade tensions and, of course, the current uptick in coronavirus infections. As for the US PCE, the Fed's preferred inflation measure, it was again inflated by base effects. However, whilst the year-on-year increase was in line with economist expectations at 3.4%, the month-on-month increase surprised on the downside at 0.5% versus expectations of an increase of 0.6%. In our opinion, this is extremely positive for global equity markets as it shows that inflation isn't running out of control and an increase in US interest rates is a long way away. And as such, as you can see from the accompanying table, equity markets recovered last week's losses. Looking ahead, we have a relatively quiet economic calendar this week. Of most interest will be Friday's US unemployment data, which includes non-farm payrolls, unemployment rate, participation rate, and average earnings, especially if it comes ahead, of a long Independence Day holiday weekend in the US. Other data releases include US ISM, Institute for Supply Management, US and Eurozone consumer confidence, Eurozone CPI inflation, Japanese industrial production and Chinese PMI. Additionally, we have an OPEC meeting, and with the price of a barrel of Brent currently just above pre-coronavirus levels at $75 due to recovering demand, the coalition may increase supplies, which could help to further contain inflationary worries.